Okay, our focus tonight is on going really back to the basics. I know we've covered a lot of wide things over the last couple of weeks that have had nothing to do with simplicity or MP4, because I want to kind of just broaden our spectrum of what we look at pertaining just to just naked charts and being able to look and see what we see. But I feel the need as we're getting into the end of the year and wrapping up the year, and just let you all know we're entering into holiday season. Volume is about to go way, way down. Okay. And so I'm a firm believer in having multiple ways to trade. And so a lot of trend trading, a lot of reversal trading. It may not be as accurate or dependable as it normally has been. Okay. So we have to be cognizant of the seasons that we're in for no other reasons than institutions. No other reasons than institutions are kind of gearing down for the rest of the year. Once the holidays hit, they're not making a bunch of big moves. A lot of these bankers, they trade for the purpose of getting bonuses. Their bonuses are kind of based upon what they do from September 1st through October 30th, 31st. So it's kind of baked in the cake what bonuses they're going to get. And so they're not really going to move the market a whole lot rather than just to set it up for the beginning of the year. Okay. So we just have to be cognizant of that. And so we're getting into a mode where pairs and indices and all this stuff have pretty much made the move they're going to make for the rest of the year. It may vacillate a little bit, but the major moves have been made. We have 6 weeks left in the year. So it's not going to be a whole lot much more is going to be moving, guys. So I want us, while we are entering into this mode, I want us to use this as a mode to study when we know it's coming, so that you can look how the market moves and position ourselves so that we can maybe take advantage of small moves, or this just may be a period of time where we're just studying the nature of the markets. Okay. So I'm going to share, let's say we're going to go back to strict basics here. Okay. Can you all see that? All right. It says that you all can see it. Okay. So this is a basic simplicity setup with the trend surfer, with the algorithmic trend line. Of course, we added the 50 smooth moving average there, and we also have our arrows indicating 4-hour and daily support and resistance. Okay. And we have an oscillator here. I have my Gazelle Wave Runner. You all have the standard one that I gave you. Okay. So we're roughly apples and apples here. Okay. So if you all are following along with me with your chart setups, if you can pull whatever your resident just default simplicity setup is. Okay. So I want to go from the top to the bottom just to explain, just to ground us back to where we started. Explain the whole premise of our trading strategy. Okay. The premise of our trading strategy is this. As we know, simplicity is a reversal system mainly. You can use it for other purpose, but its main bread and butter is being a reversal system, meaning the only time something reverses is if it rejects a level of structure, then we find an entry, and we find alignment, and then we see the pips. Okay. Same here, repeats. We hit resistance. We see arrow for entry. We see downward movement. We get in. We see alignment. We get in. Okay. It's that simple, y'all. It is not complicated. The part of it is we have to manage our emotions and our patience regarding it. Okay. So with that being said, there are, we indicated that there are 3 types of setups. Okay. There is the C setup. Okay. There is the there's a C, there's a B, and there's an A setup. A setup is this, where the daily 4-hour are pushing both the same direction, okay? C setup is just a 4 by itself, and a B setup is a 4 going in the direction of the daily, okay? No, let me correct myself. A setup is the one that is going also with the daily trend. That is the A one, okay? So let's find the direction of this daily trend. This daily trend is bearish. So any 4 in the daily together with going in the direction this would be considered an A setup, okay? So our endeavor is to find high quality setups, okay? And by high quality setups, I mean low drawdown, high probability, okay? So that's the whole premise of it, guys. And so what I want to do is just take us back to the basics. Let's start with the 415. Okay. This is a 415 setup. We would look for 4-hour rejection. We wait for the 4-hour, 15-minute arrow to come in on simplicity. And this is the wrinkle that we added. We look for alignment vertically when this line passes over the 50 moving average. And when everything lines up, we have a break of structure. Everything lines up right here for just a split second, right? See line up, we see synergy between all of those, and we can then ride that down. Okay. Well, we see where trend surface says, well, bullish momentum comes in the market. It did. But you can ride it down to here, or you can ride it all the way down there. That's the whole basis of it. Okay. You know, we've talked about doing we know that this particular one, it's in a downward trend. It's in a bearish trend. So we can do the daily one. Okay. The daily and the one together. When you do that, I wouldn't trust any of this because it's too herky-jerky. That's the optimum entry right there. When you did that, get on the 1 hour, backed up by the daily. That's 340 pips right there. Okay. So it's about, that's more of a trend trade, not necessarily a reversal. I'm getting into the flow of what the trend is based on the hour time frame. Okay. So that's the basis of it, y'all. Nothing more, nothing less. All of these things here, they're cool. Will this make you money going against the daily? Yes, it will. Is it a harder way to make money? Yes. This is the higher probability. So you literally can take everyone that's going with the daily, this one, take that one, take that one, and that's going to be your highest probability. Okay. But we wait until pass over the 50 smooth moving average. That way we can do something like this. We can get in on this candle. We can put it behind this level of structure. Even going down to right here, it was a 50 pip stop loss, but it went 270 pips. Okay. It's more than a 5-to-1 trade. So we look for low stop loss ranges, high risk to reward yield, and high profits. Okay. That's it in its nutshell. And I'm doing this for the benefit of those on here and those that we had people to join our group at different times. So I wanted to make sure that people got the same information in case they didn't go through everything. Okay. But what I want to talk about in particular, and we just saw it on the 1 hour, are some of the reasons that we don't get in. Okay. One of the reasons we don't get in is kind of this, what we see. You know, it's consolidation on SpongeBob SquareHead, as Uncle P would have it. Okay. As we can see right here, guys, let me go down to 30 just to give a little more. Look at this on the 30-minute. Herky jerky. All right. As we can see right here, look at the correlation between this and that. The volume is very thin. Okay. One of the reasons some of the setups that we see do not move is because there's not enough volume to support it. All right. It's not enough volume to support it. Look at this volume here versus this volume. Look at all of this volume. Okay. That's an exponential difference between that and that. And you can see this volume created this volume created that. And these are the setups that we want to see. We want to see rejection of structure, see an arrow, see strong volume going in, and we see it carry all the way down. Okay. So that's one reason. Consolidation and lack of volume. Okay. Lack of volume. I don't care how beautiful a setup you see, if there's not enough volume there, you won't get good movement. You won't get consistent movement. It'll do like this. It will move. Now, on its surface, this thing did break structure. If we look here, it did break structure, but it went right back up into the range because there's not enough volume. Okay, it's like you have to have enough speed to go into that headwind. Okay, versus this right here, it clearly broke this structure here when that broke, and it kept going down. Okay, so consolidation and lack of volume are reasons to not get in, even if everything looks great. If it's not enough volume there, do not get in. Okay. Another reason to not get in, if it's going against the trend. Okay. I'm going to look at this one right here. After this long, look at this long, beautiful run we had right here, right? I mean, just a beauty. I would not trust this going against this strong trend. This is just a pullback. Okay. Simplicity just simply called a pullback here. All right. So, you know, to play off of last week, we can go to this high right here, go to this low, and you see the Fibonacci. You see the Fibonacci right there. What did it do? It hit that 61.8 right here and kept going down. All right. So when I say that you already have been looking at Fibonacci, guys, you've been looking at it already because the buy and sell boxes are based off of that. Okay. 1 second. This is the reason I don't like using it on MetaTrader 4 because it's hard to get off. All right. I'm sorry about that. Okay. So this would simply be a pullback. So this is the entry off the pullback, which is a continuation. Okay. So what we want to understand that when we miss the initial big move, you have to wait for a pullback in order to get an entry. Okay. Whenever we have moments like this, I'm going to highlight this, and I'm pretty certain I'm going to find an entry on the 5-minute. And there we have it. Y'all see it? 5-minute is a great re-entry time frame in correlation to the others. All right. But if you don't see clear entry, do not get in. we're talking about mainly tonight the reasons that we don't get in. We always, a lot of times we focus on, oh, hey, this is a great setup, go get in it. But there are reasons to not get in, okay? The third reason is, we kind of alluded to it, holiday. Holidays are low volume times. We don't want, hold on one second. We don't want, see this right here? I don't want to go to another pair because it's getting messy now. See this pair right here? See this consolidation? If you look right below it, you'll see thin volume. That's a direct correlation to consolidation, guys, because there's not enough volume to support it. Okay, which makes sense. What is the Asian market known for? The Asian market right now, that what we're in, it's known for consolidation. You know why? Because it's not a lot of volume there. All right. So these things don't just happen for no reason. And whereas the UK market, as well as the US market, they're known to be more trending because they have a lot of volume attached with them. Okay. And so, like I said, you can have a great setup with no volume and it will not get you anywhere. Okay. It'll make you frustrated. That's what happens to a lot of people. Okay. We go to another pair. Just so we have a clean. All right. Okay. Another reason, it may be Monday or Friday, either leaving out of the week or going into the week. Okay. I want you all to see something very, very that we rarely look at. I know some people don't even have it up on the screens. Okay. I know it looks a little messy, look beyond that. But these are the weekly candles. Each candle represents a week. Okay. And I want you to look how every candle starts out. All right, let's look at this particular week right here. Okay. This particular week, let's look at day and time. This is December 30th, 2012. Okay. This is a particular week. Well, based on what this candle did, let me zoom in. Oh, it won't let me zoom in anymore. I'm sorry about that. Based on what this candle did, this candle pushed up at the beginning of the week, pulled back, came down. And I don't know, it may have even pushed back up. Okay. So weekly candles are real things too, y'all. I know we don't deal with them a whole lot, but guess, let me tell you one thing about candles. Candles are most volatile at the beginning of the candle. At the life cycle of the candle, it's most volatile at the beginning of the life cycle of the candle, and the end of the life cycle of a candle. Okay, if y'all don't believe it, let me go to a 5 minute. What time is it? It's 8:24. Okay, so let's look at the current candle on the 5 minute. That should be less than 1 minute left. Okay, let's just look at the candle, see what it does. All right. Anybody know how much time exactly is left? Let me look on my trading view. 3, 2, 1. Candles just ended. It's supposed to. See how that volatility? Y'all see it? Y'all see all that volatility? The last couple of seconds of that candle. All right. Supposed to start painting another one. I don't know what I had yet, but anyway. My whole point is this. Y'all see how erratic that candle was at the end of its life cycle? The reason it was is because these candles have certain assignments per the market and what the algorithm tells it to do. So if a 5-minute candle is erratic like that, let's go to a 1. Right? If a 5 or 1-minute candle is erratic like that at the beginning or the end of that candle, guess what? Guess what Monday is? Somebody type what Monday is as it pertains to the weekly time frame. Looking in the chat. It's not hard. It's not a trick question. Monday is what? There you go. I told Mr. Dave. Exactly. Both of you guys are right. Trap day. All three of y'all are right. And the reason it's considered a trap day is it will push up. You see how this candle on the 1 minute to end. And see how crazy it looks. Monday is the beginning of a weekly candle. So what will it do? If the algorithm, market maker, whatever you want to say, says, hey, we want to go up and create and touch this part for the week. So this is going to be the high of the week. It will shoot up and people say, oh man, we get ready. This thing going to the moon. It will trap those people just exactly as Robert said. It will trap people at the beginning of the week and you are stuck there for the rest of the week unless you're going to just take that loss. Okay. Same thing with Friday. Friday is the end of a candle. Okay. So let's look at this on the 1 minute time frame. Look at, this one right here. Exactly. Let's look at this one right here, this doji. This thing covered all of this range and all of that range and met in the middle. Okay. So that's the reason Mondays and Fridays are considered trap days, as you all say, to where there's rarely is there any flow. Sometimes there is, majority of the time there is not, because the weekly candle is either opening or closing. And if you look at the life cycle of any candle, I don't care if it's a monthly candle, I don't care if it's a 15-minute, I don't care if it's a 30. The majority of the volume and the erratic nature of it happens in the last moments of the life of that candle. Okay. The last moment of a weekly candle could be half of Monday or half of Friday. Okay. So that's a reason we do not trade. If you do, know that you're going in to get a defined amount of pips and get out. Those days are not days to be holding trades, doing swing trading, doing a bunch of day trading, because it will go all the way up, get you good profit, and just the bottom will just fall out. I experienced it today. Got in on NASDAQ on a buy. About time the market opened. Man, it was going good. It hit the high of the day, the ADR high, and it just sank. I was able to reserve some profit out of it, but just a fraction of what I had already reached because I thought it was going to keep going up. Forgot that it was Monday. It reached up, created a top wick. Let's go to NASDAQ, just so y'all see I'm not making stuff up. Hold on one second. Let's go to NASDAQ. I'm on it. I don't know why it's doing that. Either way, I was going to show y'all that weekly wick. Okay, here it is. Sorry about that. Look at this. Y'all see, this is the weekly wick right here. You see where you candle. Y'all see where it went up and created that little wick? There are people trapped in this wick, y'all. Don't forget, this is a weekly candle. There are people, it went up and hit that high today, and it was going down ever since. Now that's saying, oh, that's just one little candle. Isn't that cute? If you measure from this top of this candle down there, that is 346 pips in this one candle. And this is only the first day of the week. Okay. But trust and believe, there are people trapped up there that made a good thing that thought this was going to the moon. If they had this, they would have known that this is at the top of the weekly box. So it's time to reverse. Okay. So Fridays and Mondays, I would recommend that you don't trade. The best trending days are Tuesdays, Wednesdays, and Thursdays. Okay. This is where you have your reversals. This is where you have your ability to get in some good trend trades and things of that nature. Okay. This is like a potentially good look right here. We know that it's going down on the weekly, on the hour. Let's see what the daily's doing. I'm just doing a little live analysis. It could be possible the daily's about to turn around. We don't know. Okay. The next one is before and after news. I do not recommend that you trade before or after news. And I mean within a 30-minute radius. Okay. Some people choose not to trade at all on those days, and that's fine. What I am saying is we are about being in the market, not whenever it's open, but when it's ready to give us pips. Okay. We are interested in when the market is ready to give us pips. If it's not ready to give us pips, I find something else to do. If it's acting funny, we leave people who act funny alone, including the market. All right. So let's just make sure that we're just cognizant of that every day is not going to be an opportunity. And the more you hang around, the more you're going to try to force it. Okay. But before news, 30 minutes before news, 30 minutes after news is a no trade zone. Okay. Before or after, it's no trade zone. Okay. I would dare say probably this candle right here is a news candle. Anybody know what news came out today that moved the markets this morning? Anybody remember what news came out? I'm gonna shut this down for a sec. Anybody remember what news came out? Come on, guys. Y'all know. I'm gonna tell you what news came out. It was rumored that Jerome Powell would not be selected to be the Fed chair. That President Biden really didn't care for his policy, and he keeps printing money, and he feels like he's causing hyperinflation. Well, they announced this morning about 8:15 or so. They announced this morning that he had been recommended to serve another term by the president. So the market liked the market likes stability. They don't like people changing midstream. And so Jerome Powell, even though everybody does not agree with him on everything, he did represent stability, and that made a difference in the US dollar. So the US dollar's value shot up. That's the reason gold went down so hard today, because the US dollar went up today. Okay. Anything opposite dollar will go the opposite way. And so what happened was, as you can see here, let me look and see what time this was. 22nd, 2200 hours. Okay, that's it. That's this evening. This is more like this morning. Okay. News. Let me look at something on the US dollar because I know that really moved. Excuse me 1 second. See all this downward pressure because the dollar was going up today because of that news. And it really shot. So I was in something that really went against me. And I'll be honest, I forgot that there was news going. I think it was Euro JPY. Look at this. Y'all see this? This is what I was talking about. There was no reason for this thing to shoot up like it did. You see how everything was flat and all this volume came all of a sudden? Look at that volume. Pushed it up. Okay. So before and after news, we wait for 30 minutes, guys. It's not that we can't trade on those days, but we wait for before 30 minutes before we get out. We either hold our positions, we get out, but we do not get in. Okay. Sometimes you want to ride it out and that's fine. No. And after the trade, we wait for everything to settle back down because what happens, the market goes back into its rhythm once things settle out. Okay. And we wait for 30 minutes before or after. The last one is pertaining to long runs. When we have long runs in the market, it has to breathe, y'all. We cannot run a long ways without needing to breathe, right? Like this is a decent run right here. Okay, it hit a level structure, and it was time for it to pull back and breathe. All right, as we talked about with Fibonacci, it goes to the top. We look for things to go to that golden zone. What do we see as a golden zone? We see this right here. Is that golden zone. Okay, this is a golden zone. As we can see, it hit that same zone twice and kept going. All right, it retraced. Basically, it's saying right here that price retraced back 50% of this long runs, 50% of this run, 50%, 50%, made a double top, fell down. Okay, but we don't jump in just because we've seen pips move good and we want to be a part of it. Okay, we have to let it breathe, come back. You made some money here, came back, broke even. Then it gave you the pips. Okay. So we do not, after long runs, it has to pull back. I know some people now that are buying gold right now because gold ran down so far that it has to pull back. And the pullbacks can be very strong. I've been in a pullback that was going against me. I was like, man, I wish I was in that trade right now. Okay. And I think the last thing we already covered was volume. That we must have necessary volume in order to make the market move, y'all. And the other thing I will add in, we have to have currency imbalance. Okay, that's when I showed you guys that strength meter from last week. On Thursday, showed you the strength meter. That strength meter shows you the imbalance in the market. Okay, shows you imbalance in the market. If two currencies are balanced, it's like a tug of war. You give a little bit, I give a little bit, but nobody's ever winning. When there is a great disparity between the rankings of the country's currencies, then we have movement. Like today, it's supposed to be USD JPY. They were together for a long while, and they were just tug of war. All of a sudden, when that news came out, US dollar shot up in value. Great British pound stayed down in the 3 range, very low. And so as a result, USD JPY shot up with a lot of volume because there was a wide disparity in the ranking and the volume in the currencies. Okay. It's that simple, guys. It's not complicated. But so we wait for high volume times, for high probability trades. We avoid news. We avoid Mondays and Fridays at all possible. I'm not saying you can't trade, but just know the animal you're dealing with on Mondays and Fridays. Okay. Holiday schedule. We know what happens in the consolidation. Okay. Anybody have any questions about that? I just want to review that really quick as to the reasons that we don't get in trades. We're always talking about why we do. Those are a list of reasons why we do not get in trades, or at least we pause and we ponder before we get in, before we commit our capital to it. Okay. Any questions? Any questions that pertains to what I've talked about, why we don't get in? And after that, then I'm gonna open up the floor. Anybody got have any general questions and any particular pairs that you want to look at? None for me. None for me. Anybody have any pairs you want to look at? What is it? Is anybody in anything in particular? AUD CAD. AUD CAD. Okay, Mo, let's look at it. AUD CAD. I've been looking at this one, licking my chops. It is not ready to rock and roll yet, I don't think. Hold on, let me see. Yeah, I already wrote a fib. I did a fib on it. So here's what we know already. I've been looking at it myself. We see back here established the daily in the 4 hour. So he hit once, hit twice, hit 3 times. Okay, this is actually a good sign whenever something is okay, great. Whenever something tests that often, test a zone, this is a strong zone. Okay, so when it pops, it's really going to go. All right. But we just don't know. It seems like everything's kind of lining up right now. We already have a cross of the 50 moving average. It's come back and it's retested. Now, just to prove to y'all fib works, because I know fib is kind of this voodoo thing from the devil, right? Take it from the swing low to swing high, right? I took it from the swing low to that swing high. Look where price came back and touched. If you had put a pending order right there, you'd be in great pips. Y'all see it hit that golden zone between 38.2 and 61.8. Okay. This is not voodoo. This is not magic, guys. Like, we don't know exactly what it's going to be. We know that this is the magic zone, though. This is the zone where price comes back to. It's mathematical, almost certainty. You could have gotten in right there and enjoyed the rest of this move going up. But to answer your question, Mo, I mean, all the markings are there. This thing has been consolidating for a while, so we know consolidation precedes breakouts. So I was telling somebody earlier today, this daily carries over no matter how many times this goes this, boom, 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 boom. Until I see another white arrow, I am in an uptrend. Okay. I am in a bullish uptrend on the daily. So my highest probability at that aspect is that I take trades coming when bouncing off the 4 when it's going with the daily. Okay. Now, did this give you some pips? It did. Okay. But the highest probability is here. I just believe in that. Highest probability is with the daily. Okay. Mo, I hope that answers your question, bro. Okay. UJ. Hold on 1 second. There it is. UJ and UCAD. Okay, you're welcome, sir. Okay. Okay. This is UJ, guys. I mean, it had a beautiful run today. Um, I think there are other pairs out there you can find something else on. This is 30-minute. Japanese yen has been very unstable of late. This is a key. This is an indication that it's going to keep going up. Just don't know yet. We just don't know yet. Okay, let's look at UCAD. UJ kind of burnt me earlier, so I'm kind of staying out of it personally. But the U.S. dollar, it needs to make up its mind. Okay. So this is UCAD, all right? So this one is setting up, this is setting up great, guys. At the very least, we know this is a what setup. Somebody talk to me real quick. At the very latest, hold on a second. We don't know yet if it's an A, but at the very least, we know it's a B because of what? That's right, Dwayne. At the very least, we know it's a B because of what? Yes, because the daily and the 4 are together. At the very least, we know it's a B. B setups do great work. Now, in order to confirm whether it's a differentiate, whether it's a B or A, we go to the daily time frame and see where the current trend is on the daily. And the current trend on the daily is bearish. Okay, which means this and this with this makes this an A setup. This is an A setup. A setup means I got the 4 and the daily together. 4 and the daily together, and it's going with, if y'all remember back when we used to talk, this is the directional bias of the daily. Okay, just as this was the directional bias of the daily. But this directional bias of the daily was going against the trend of the daily. Okay. There's a difference between daily trend and daily bias. The daily trend is bearish, but the bias during this time was bullish. Okay. So we always want to go with the white and gold or orange. But all of those gold and orange ones are not created equal. When it's going with the daily trend, you have stronger moves, more direct moves, higher probability. Higher probability means more profit. Okay. All right. So basically, we would watch this, let it do what's going to do. This is the trend line here. And guys, I'm really, really getting into the trend lines. I really like them. All right. So this is a little bit of a trend line, I guess you could call it. But once this is broken, it's Probably gonna break, retest, and then gonna head down. It'll take a while for it to develop, but it will happen. Yes, Kurt. The older way with simplicity actually used to be you had to check 2 time frames high. If you're taking something on 15, you would need to look on the 30 and the hour to see if there at least one of those are in the box with you. The reason Uncle P came up with that theory is you can have an entry arrow and everything look good, but if the higher time frame has not finished running up to turn around with you, you're then going to be fighting against higher time frames. You don't want that. Okay. It's a method to that madness. Anybody else have any pairs you want to look at? Any questions about anything? It's no dumb question. Anyone? So I was there say look out.